Good morning, everyone. Thank you for joining us today. I'm Isis from Client Portfolio Management Team. Today, we have two portfolio managers from our Greater China Equity Team to join us on the topic, what's next after the rally? On my right-hand side is Wenlin Lee, and on the screen, we have Ben Yu joining us from Taiwan. Welcome, Ben. Welcome, Wenlin. So my first question is to Wenlin. So China has been doing fairly well this year. Do you think it is sustainable? And what's your view on China economy next year?
Thank you. Well, we are positive on the China economy, especially first half next year. Looking back this year, we have two conclusions. One is China is the first country to pass through the COVID, thanks to the good government control and very fast reaction. So we can see that Q1 economy reached a trough because of the lockdown, and Q2, Q3 we have a sharp V-shaped recover. Meanwhile, all of the other major countries globally, they are still suffering from the COVID, and recently there's even a second wave. Second conclusion is China export actually benefit post-COVID. We can see that China export down more than 25% when the COVID just ramped up globally. And the export numbers have a sharp recovery since end of Q2. And in November, China exports grow more than 20%. China's export global market share reached historical high. Reason is also very simple. China is the first country to resume productions. And all of the other countries' supply chain is still suffering from the COVID. So China is taking the responsibility of global production base. Looking into 2021, I think several drivers is positive for the economy. First one, we believe the export trend will continue. Secondly, we believe that domestic consumption will continue to recover. Some of the consumption like travel, like hotel, restaurant, they are still below the normal level even now, which will be better next year. Third reason is PPI, i.e. the industrial products pricing index, is gradually recovering, which is normally good to the corporate earnings. So all in all, we are positive to the China economy, especially first half, on a very low base.
Good. That's good to know. So we need to follow up with you. Against this relatively healthy macroeconomic backdrop, so what's your outlook for China equity next year?
We have two markets, right? So for China A, we think that China A share market still have more upside, despite the strong performance this year. Looking at the valuation is had historical average level, so it's not stretched, so therefore the liquidity, even though the domestic liquidity is marginally tightening, we do not believe that it will hurt the valuation materially. Meanwhile, the corporate earnings will be very strong, especially first half next year on a very low base. Normally in this scenario, equity market have very low risk. We are also positive on the Hong Kong market. We can see year to date, HSI is flat, while the Asia index up more than 25%. Part of the reason is due to the relatively weak domestic economy in Hong Kong, and part of the reason is because HSI is more dominated by the traditional industries. Valuation of the Hong Kong market is almost historical low. So anything positive happen in 2021, like vaccine, we believe that Hong Kong market is likely to perform. Meanwhile, despite the lackluster index performance, we can see several sectors' performance was really good this year. For example, some of the tech names, some of the internet names, healthcare, property management, and some of the new IPOs. So which shows that the market activities is still very good in Hong Kong. And also, if you look at the southbound inflow, it was really strong, especially in the second half. Also showcase that domestic investors are more and more interested in the Hong Kong market. So all in all, we are also positive in the Hong Kong market.
Thanks, Wing Min. So let's turn to Taiwan, Ben. So Taiwan equities also have a good year this year. And I'll ask you the same question. After the rally, what's your outlook for Taiwan equity next year?
Okay. We are still positive in the first half of next year for Taiwan market with 4 reasons. Firstly, Taiwan doesn't have any impact of COVID-19 this year. Our GDP growth rate estimate is 2.5% this year, which is one of the best number in Asia. In 2021, Taiwan GDP will also be improved to 3.7%, even if we already have a relative high base this year. Moreover, our estimate of earnings growth for next year is 18%, which is also based on the 10% high base of this year. Secondly, the liquidity is still quite good in Taiwan as QE and weak US dollar. And for Taiwan Central Bank, we still have room for a rate cut. So the liquidity is still quite good. Thirdly, we have some structural growth story in semi sector and the new product cycle in tech downstream. Finally, Taiwan is the key beneficiary of tech conflict. After U.S. election, we think U.S.-China trade tension may ease in the future, but tech conflicts will remain the same. We think protect IP and high-end technology will still be the core policy for U.S. In the future.
Okay, thanks, Ben. So since both of you are quite positive on the Greater China equities next year, then let's go deeper as to what specific sector or investment themes that you are most excited about. Wing, maybe you can start to share with us first.
Yeah, we continue to be positive on several structural opportunities. To give you some examples, like chipset. Despite the tech conflicts between China and US, we believe that China will eventually have its own chipset value chain. Second is biotech. We still see big opportunities here because generic drugs still dominate in China. Third is EV. Starting from this year, it is becoming more and more clear that EV is a global trend. Aside from those startup EV companies, we also see opportunities in the traditional car companies and also in some of the auto component companies.
Thanks, Wing. That's interesting. So here, electric vehicles, semiconductors, and these themes and sectors are also very relevant for Taiwan. Ben, do you see similar opportunities in Taiwan?
Of course, we are also positive on semi and EV sectors in Taiwan. For semi sector, Taiwan has the best foundry in the world. Our semi supply chain and the IC design house also have a quite good position. Both of foundry and IC design house are the key beneficiary of tech conflict. For EV, investors can buy a lot of EV components or EV brands in China. However, in Taiwan, we have a lot of EV components in tech upstream, especially for power-related semi-components. Moreover, we can also find a lot of new product cycle in tech sector, such as the new generation of wireless transmission. Data transmission is getting bigger as high quality video and live stream. So people need like Wi-Fi 6 or 5G to improve transmission speed.
Okay, thank you both Ben and Wing today. So lastly, if I can just remind all of you to share your feedback to us for this section, that would be great. Everyone have a good day and have a good year.